What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is September 10th of 2020. Well, folks, I hope you are having a fantastic day wherever you are, and as you can probably tell if you're watching the video right now, I'm back home at the US after a 2.5-month trip abroad. I gotta say, guys, first and foremost, thank you all for sticking with me as I've been kind of working on my laptop on the go and traveling between different locations. Some people were joking that I had bought up multiple properties because of my crypto winnings, and no, I'm not a property swinger just yet, not big, not that big, and also not spending my money on property when we could be spending it on crypto. But outside of that as well, guys, I just have to say it was a wonderful time getting to travel abroad, but it is also good to be back home to a degree as well and to get back in the swing of things. So anyways, just wanted to go ahead and preface with that. We've got a very important topic in today's video, and that's really understanding what's going on with Bitcoin's price action. I've hinted this point a few times in the past as a possibility, even though I'll be honest, I was on the fence and I really didn't think that this would happen. So I'll go ahead and say that this was one of the wrong calls that I had, and taking a step back a couple of weeks in the sense of price action and betting where Bitcoin really could go down to in the sense of price. But we'll be talking about this as well as diving into a few other things such as the altcoins that we're trading, Ampleforth, and other DeFi plays leading the way in the market, just kind of talking about my thoughts on that, and also diving into the craze in the stock market right now and some of the sell-off that we've started to see over the past week. All right, guys. If you're here right now and stuff, you obviously listen to me ramble enough. Let's just go ahead and dive straight into it. So taking a look over the last 24 hours, we can not only see ETH has made a stellar rebound leading the way out of any of the market leaders, but taking a look over the last 24 hours, a very clear trend here. A lot of double-digit plays in the green that are in the DeFi or enterprise blockchain space, with a few other plays down in the red. Very few exceptions, the broader market making a steady recovery after a pretty stark sell-off in Bitcoin as well as most altcoins following. Solana going up 35% after a recent partnership with Tether, starting to move and allocate some of the Tether currency onto the Solana blockchain to help with scaling payments for Tether. Ampleforth as well, 34%. Yearn Finance, 30%. Aave, Loopring, Rin, Algorand, DeFi Money, Synthetics Network, Energy Web Token. You can just go down the list here. BitShares as well, you can see as a DeFi play. All major moves here across the board of the market, many of which are plays that we've constantly covered here over the last few months. It's just awesome to see this trend continuing through here and to see the rebounds coming in better than the sell-offs. All right, so let's go ahead and talk a little bit about price here, guys. I want to go ahead and just talk about reasonably what we're seeing right now and what I think is the reasonable price range we could really go to. I'm going to keep it short, sweet, and to the point. I know that doesn't really happen with me, but we're going to go ahead and do it this time around. So it's not too complicated to explain really what's going on here. What we're seeing right now is something that I really kind of feared in a sense for Bitcoin. It's not like anything bad in the long term. It was just something in the short term, but I guess kind of the good thing is this gives us a position to average in, possibly, kind of build in a larger position if you have some additional fiat. But I want to go ahead and explain what we're seeing here. So taking a look here at the logarithmic weekly chart for Bitcoin, we're taking a look on Bitstamp here. This is, of course, taking a step back all the way to 2015. We really only need to take a look here between the top in 2017, the rising lows, the lowering highs, the wedge that was building up, and the breakout on price here. We went up to about $12,000 on Bitcoin, and now we've corrected back down, with the low being here for the last week, around 9,800 being the low here for price. And again, a lot of people curious about where Bitcoin's going to go. Well, what we're really seeing here is a making of support on previous resistance. So basically, again, turning this line that was holding Bitcoin's price for a very long period of time, multiple years, into new support. So if we take a look here at one example, and that is gold. Gold had a very similar case. Again, I was hoping that we weren't going to see this because I was wanting to, for most of you guys out there, you guys know that my trading style right now is not to really go in and out of Tether or other stable coins into crypto. I'm not really doing that kind of trading. I'm going in and out of crypto positions. But we can see here for the most part, if we take a look at the long-term gold chart here, gold had a very similar pattern here. A long-term range of higher support levels, points of resistance, and what we see here is price breaking above that line of resistance, coming down and making its support, and then kicking off the next rally. So again, not only just kicking off the next rally, but breaking to all-time highs, mind you, over the last year and a half. So just, again, taking that into mind here, this is very important when we're taking a look at Bitcoin. As Bitcoin is seen as a digital gold, I guess, by a lot of people in the sense of its investment philosophy and what you're really buying as an asset. I think in this case that we've got a good chance for Bitcoin, at worst case scenario, would go down to 9,000 if you're taking a look at the logarithm chart. If you're not looking at the log chart, it almost looks like we're kind of already there. So again, this is a very subjective range here. And my major point that I just want to drive across all of this is that I'm not selling. As I mentioned to you all a moment ago, I'm very transparent about what I do in regards to my trades and positions. In that case, guys, I'm not really exiting out to stable coins. I really don't feel the need to do that right now. Maybe will there be an opportunity in the future to do so? Maybe when things are overextended in the short term? Sure. But even this, I really didn't feel we were overextended. We had treaded this range, and we still are treading this range since all the way back in 2019. And now I think what we've got is a really substantial chance to find support around here relatively soon, start kicking back up, and start to, again, move higher towards 13,000, 14,000, and starting to climb up towards the all-time highs of 20K. Now, again, I've been keeping in mind this time frame of going into Q1 of 2021 before we get up to that point. Again, a lot of people have said, oh, it's going to happen this year. It's going to happen right away. Guys, we have to keep our time frames very conservative. We're working with expanding cycles or expanding waves in the market. No matter what lingo you want to use, from top to bottom, it takes longer with each of these run-ups in markets. So very, very important to keep in mind. Now, I want to go ahead and talk a little bit about the altcoin space right now. Again, if we just take a look back here at the major market leaders, taking a look at our list, Ample is the clear winner here. You could even look at Ample BTC or Ample ETH. I know some people always mention that, but really at the end of the day, you know, against these assets, Ample is the best performing in the sense of the cryptos that we're watching. And just taking a look here as well, we want to focus in on market cap here. We got in on the newsletter. We mentioned a trade here back on the dip here on September 4th. Got into a position here, started to make a little bit of a return, but actually was in the red for a bit. And now we started to kick back up. We got volume rushing back in, and now we're in the green right now. And it's starting to signal here on the multiple hour charts, or taking a look at the daily as well. We can start to see here that Ample and a lot of other DeFi plays are starting to kick in and starting to make some major moves, starting to set in higher lows here, right? Starting to build a base here for a much more longer term and substantial trend, rather than I think these kind of sporadic 4 or 5 day rallies that have crazy gains. I think it's going to be a nice substantial run up here in market cap where we start to set higher highs and higher lows. So that's what I'm going to be watching for here over the next few days. But there is one thing that I wanted to mention to you guys, and I know a lot of you are still hearing me talk about DeFi. You're wondering, what is decentralized finance? What is this kind of craze around DeFi? And why you keep talking about this thing called Ampleforth, Nick? Well, anyways, if you guys are interested in that, I'm actually going to be posting a video on the Digifox YouTube channel that's titled, What is DeFi? Or WTF is DeFi? I'm going to be doing a content piece like that just kind of dives into what decentralized finance is. And as you all know, I've been working on Digifox and stuff, which is really good culmination of plugging into all the decentralized financial services and making it extremely simple and seamless, more seamless than traditional exchanges, etc. So we'll have the video up here. If you guys want, you can go ahead and subscribe to the bell icon on that channel. I'll be putting a lot of good DeFi content on there, and I don't really want to bother everyone on here with constant DeFi content because some of you guys aren't really interested in it. But anyways, definitely go subscribe in that case. You can just look up Digifox on YouTube and you'll be able to find the channel. Now, I want to go ahead and talk a little bit here about the current environment when it comes to equity markets. I know I haven't been doing too much macro analysis. The exciting stuff has been in crypto markets, but there has been some interesting changes that we're seeing in equities. Central banks still maintaining very lucrative policies here in regards towards stimulus for the broader markets. We can see the ECB, we can see the Fed, we can see the Bank of Japan all leaping forward, injecting trillions of dollars of liquidity, still on pace to continue towards higher levels. But we are starting to see here that there are some worrying signs here, whether they're kind of short-term events or, again, maybe starting to lead to some more macro events here with just valuations being overextended and central bank monetary policy not playing catch-up. We can start to see here that equity markets are starting to take a turn. Tech stocks that have been leading the way here over the last few months started to cut down in a matter of 3 days, multiple weeks of gains. In fact, pretty much the whole past month of price action going down towards early August. Now, again, I don't want to be a doomsdayer, guys, because at the end of the day, again, we've been staying relatively neutral, whether it be here on the channel or in the newsletter on equities. Equities have made a killing since back in March. Right? In many cases, some equity plays have far surpassed Bitcoin's performance and other assets that we trade in crypto. Very fair point to make. But the key thing to keep in mind here is that when you start to see not only these kind of dramatic sell-off days, it can not only be worrying in and of itself, but the key thing to focus on here as a trader, if you guys want to focus on like, or learn about how I would kind of keep the perception here in markets. I don't get really worried in these initial, 3 or 4 day sell-offs. These kind of 3 or 4 days can happen many times. We've gotten them in the past before, right? Thing I look for that gets me worried, and I'll go ahead and grab the polyline tool here, is when we start to set in lower highs and lower lows, right? Now, where have we seen this kind of pattern before? We saw it back here, back in February. We had a dramatic sell-off here, right? Now, it already would have been bad if you got caught holding through this downward turn, right? Cutting down a couple of months worth of price gains. But you usually get these kind of rebound opportunities. You get people having a buy-in opportunity here, but really leads to what's known as a dead cat bounce. And you can see here again, what we want to look for is previous price levels. And back here, we had a lot to work with. This was a good base range here as well with support. In this general range, we were hoping to hopefully get price above this range, but we couldn't. And at a big even of 9,000 on the NASDAQ, we continued downward with the continued fear of what was going on back in March. So now we've got a real substantial chance here to possibly set in lower highs and lower lows, and that's going to be the confirmation of a trend reversal. It's not about being biased in regards to price. It's a matter of focusing on the clear signs of what price is telling us, right? So I don't get bearish here after a 2 or 3 day sell-off. I'm just saying to keep cautious on this. And if we take a look here at some of the market players, I'm sorry guys, I don't know why TradingView keeps telling me my format has been changing, or layout's been changing. See if I can fix that. But we can see here, Tesla down from 500 to 366 in a week, right? Now, again, not saying that Tesla can't recover some of this stuff. And yes, we can take a look at the log chart, not too big in the grand picture of things. But isn't it interesting how this happens right when Tesla, and also another company as well that's very similar, Apple, starting to shake up from its top? Isn't it ironic that this happens when they split the shares and make it cheaper for retail investors to buy? It's kind of as if we've been artificially propping up the stock market on massive liquidity and a new wave of retail traders. And as we've reached peak retail mania and participation in the stock market, we make shares cheaper. And basically the institutions are dumping on the retail traders, the everyday people who are getting caught in holding these assets at higher prices. You don't think the executives of these companies who claim to have good intentions are doing this? The board of directors, the shareholders. You don't think they're doing this when there's peak central bank liquidity, peak speculation? I beg to differ. I really think this is what's going on right here, guys. We've seen it time and time again. These valuations can't be sustained. Apple going from $1 trillion to $2 trillion in the course of a few months with no new innovative products, no new massive moves. And that's not me hating on Apple as a company. Apple's a very substantial and profitable company. Tesla as well. I love Tesla. Tesla's a cool company, as well as NVIDIA, for example. NVIDIA graphics cards. I've used NVIDIA before. NVIDIA is a great company, and they've been making some massive strides, had some major news the other day. Doesn't mean that NVIDIA gets to be a $313 billion company, or where it was back a couple days ago, which is well over $340 billion. Again, just a key point to keep in mind here, guys, that irrationality can last for a very long time, but sometimes it can get a bit worrying. Now, that's why I've been mainly focusing in on crypto markets, guys, because we've not only been seeing bigger moves in the plays we're making in crypto. I mean, I've way outperformed in my crypto portfolio versus my equity portfolio. However, I do want to mention that if you guys are looking to focus in on crypto, if you share that kind of same sentiment as me when it comes to cryptocurrency markets, you can always check out our sponsor, Bitpanda Pro, especially if you're in Europe and you're looking for kind of a Coinbase-like exchange. Bitpanda Pro has got you covered. They've got all the kind of institutional services that you need. You can plug into trading systems, so you can have algorithmic trading applications on your portfolio. And if you're interested, check out the link down below in the description. But I got to say, guys, it's so fantastic to be back. It's great to be back as well during the market moving up here. Again, I apologize. One thing I meant to say at the beginning of the video, it's hard for me to remember every single thing I want to talk about. I want to apologize again over the last week, not being able to upload too much, as again, I was finishing up my travels and coming back to the States. So it's a bit difficult to create content on the go. But all in all, I hope you are having a fantastic day wherever you are. Feels good to be back home to a degree. And I'll see you all in the next video. Take care, everyone.